What's up everybody, Ryan Pulis here from the Pulis Group with today's real estate tax tip. We're a tax and accounting firm specializing in tax planning for real estate investors. Today I'm going to take you through Form 8582, which is a very important form to understand as a real estate investor. This form provides you with all of your passive loss information for your passive activities. Form 8582, along with Schedule E of your tax return, are going to provide you with pretty much all the key tax information you'll need for your real estate investments. Let's dive into a sample 8582 and see what's going on with our boy Johnny Lawrence. Here we have a sample form 8582 for Johnny Lawrence. This form will show us his passive loss information, both for the current year and the suspended losses from prior years. If you ever need to know whether or not you have suspended passive losses being carried forward, this is the form you should refer to. This information will come in handy if you're in a situation where you have a gain from the sale of a passive activity or a rental property. It could be that you have suspended losses to use against that gain, rather than trying to perform a 1031 exchange. Maybe you don't have the time to do that. We have nothing against 1031s. They're great strategies for real estate investors, but it's much easier to tap into passive losses if they're available. If you have a rental or other passive activity with a loss, you'll have Form 8582 included with your tax return. Part 1 of Form 8582 shows you the current year passive losses. The first section of Part 1 shows rental activities with active participation. If you own rental properties and actively participate, this section will report the sum of those activities from Worksheet 1 on page 2. This does not include investments and syndications and partnerships, which will show up in the third section down here of Part 1 under the All Other Passive Activities. In this first section that we're talking about of Part 1, we see a loss of $2,882 on line 1B. This is the total current year loss from activities with active participation from Worksheet 1. The loss of $7,500 on line 1C is from prior year losses and can also be found on Worksheet 1. Line 1D is the sum of lines 1A through 1C for our total of $10,382. Let's go to Worksheet 1 and take a look. So here on Worksheet 1, we can see that Johnny has 3 rental property activities, each with a loss shown in column B. The total of column B gives us the $2,882 loss we were looking at on page 1. In column C, we can see the total prior year losses, which total to the $7,500 we were looking at. Out to the right in column E, we have the total loss for each activity, which is the sum of column B and column C. So let's go back up to Part 1 and take a look at the All Other Passive Activities section. So here in the All Other Passive Activities section, we have a net income amount of $30,000 on line 3A and a net loss of $25,000 on 3B, for a result of a positive $5,000 net income shown on line 3D. In this section, Johnny isn't reporting any suspended losses from prior years. If he did, we'd see an amount on line 3C. The amounts in this section come from Worksheet 3 on page 2 of 8582, so let's go back and take a look. So here in the middle of page 2, we have Worksheet 3, and we can see there are 2 activities, Just for Kicks Syndication and Body Bag Properties LLC. These activities are likely reported to Johnny on a K-1 from his investments in the partnerships. We can see the income amount of $30,000 in column A comes from Body Bag Properties, and the $25,000 passive loss from Just for Kicks activity shows up in column B. Again, we can see there are no prior year losses in column C. Let's go back up to page 1. Now we left off on line 4, which gives us a total of lines 1D, 2C, and 3D from the sections above. In Johnny's case, we have a net loss of $5,382, which represents the total unallowed loss which will carry forward to future years. The amount on line 4 ties to the unallowed loss total on Worksheet 5 on page 2. The unallowed loss total is what you'd want to look for in a case where you're hoping to utilize passive losses to offset a gain. Let's take a quick look at Worksheet 5. So here we see Worksheet 5 is all the way at the bottom of page 2. and it shows us the allocation of unallowed passive losses. We see all 4 of Johnny's loss activities here. Column A shows the loss from each activity with a total at the bottom. Here, our total overall loss, $35,382. Column B calculates the ratio of each activity's loss to the total loss. So for example, the 0.1655 in column B for the first activity, One Nunchuck Drive property, is found by dividing that loss in column A of 5,857 into the total loss in column A of 35,382. This calculation is done for each property, and then the ratio is multiplied by the loss for each activity to determine the unallowed loss in column C. So for each activity, we multiply column A by the ratio in column B and end up with the result in column C. Our column C total of 5,382 ties back to line 4 from part 1 on page 1. So let's go back to page 1. So we've gone through part 1. Now in parts 2 and 3 at the bottom of page 1 on Form 8582, this is where we would deal with the special allowance for real estate activities with active participation. We covered this special allowance in a prior video, but I'll give you a quick recap. So one exception to passive activity loss rules is for taxpayers with active participation in a modified adjusted gross income of less than $150,000. This exception allows taxpayers that meet the income threshold to deduct up to $25,000 against non-passive income. The full $25,000 allowance only applies to taxpayers with income of less than $100,000 and is phased out 50 cents for each dollar over $100K, completely phasing out at $150,000. We can see Johnny's income is $150,000, so parts 2 and 3 do not apply to him. Part 4 shows us the total passive losses allowed, which is $30,000 in this example. The $30,000 amount comes from the Worksheet 6. Remember, passive losses are only allowed to be offset by passive income. So Johnny's allowed to use current and prior year losses to offset his passive income for the current year. Let's take a look at Worksheet 6 found on page 3. So Worksheet 6 shows us the allowed losses for each activity. We see the 4 loss activities for Johnny. And column A shows us the total loss for each activity. Column B shows the unallowed loss as calculated on Worksheet 5, which we just looked at. And column C gives us the allowed loss by activity, which is found by subtracting column B from column A. You'll notice the total allowed loss of $30,000 equals the total passive income from body bag properties. That's the only activity with passive income in this example. So that about does it for our review of Form 8582. Remember, this form along with Schedule E are key parts of the tax return for real estate investors. Form 8582 provides you with your passive loss information and can be used as a quick check to see if you have any suspended losses that can be used to offset gains from the sale of a rental property or another passive activity. I hope this video was helpful. Feel free to comment below and hit that like and subscribe button. We are taking new clients, and if you'd like to work with us, then hit us up on our webpage, thepulisgroup.com/contact. That's ThePulisgroup.com/contact. We'll review your prior year tax returns for planning opportunities. Thanks and have a great day.